Welcome to the Compliance Officers Playbook podcast. We are launching into a deep dive today that might seem deceptively simple on the surface, but it's actually one of the most important blueprints in our profession. We're decoding the foundation of internal audit, specifically the definition provided by the Institute of Internal Auditors, the IIA.
Yeah, it really is. It's the mission statement, the charter, and, the job description all rolled into one. Every internal auditor I know, they cite this definition to the board, to management. They use it to justify their annual plan. But just sort of quoting it doesn't do it justice.
Exactly.
It doesn't get to the structural requirements and the boundaries it sets for the whole compliance ecosystem.
That's our mission today. We want to break it down layer by layer and pull out the strategic nuggets, because the most valuable insights, they often hide in plain sight. We need to understand not just what it says, but why it says it in that exact order.
True understanding really comes from dissecting the components. We're looking for the operating manual hidden inside that formal text.
Okay, let's unpack this. Let's start with the very first clause, which really sets the stage for everything. The definition starts, internal auditing is an independent and objective assurance and consulting function. So why do these two words, independence and objectivity, get top billing?
Because they are the non-negotiable core. They're absolutely the two most important attributes for internal audit services. That's why they're right there at the start. They're the twin pillars that give the function all of its credibility. Without them, you're just another operational review team.
And that distinction is so crucial because you hear those terms thrown around as like corporate buzzwords all the time. I hear people claim they're independent just because they report to the CEO or the audit committee. But the IIA standard is much stricter than just a reporting line, right?
It absolutely is.
Yeah.
Let's define them precisely. Objectivity is internal. It's about your mindset. It means seeking to look at the evidence without bias. You have to approach the task with a neutral frame of mind.
Okay, so no prejudging the conclusion based on who you like or dislike in the company.
Exactly. You evaluate the facts as they are. And then, if objectivity is the mental guardrail,
then independence must be the structural guardrail against pressure.
that's a great way to put it, a really sharp way to synthesize it. Independence is all about the environment you operate in. The sources really emphasize that performing an engagement without any undue pressure is basically synonymous with independence.
So it's about having the freedom to investigate anything and report on it truthfully, even if the findings make senior management uncomfortable.
Yes, you have to be insulated from retaliation or, coercion. And if we succeed in maintaining that, that allows us to achieve the function's main purpose.
Right, which is designed to add value and improve an organization's operations. And that leads us to the two service pillars we have.
Precisely. That shared goal drives the two types of engagements we perform, assurance and consulting.
Which brings us to pillar one, assurance. Internal audit is an independent and objective assurance and consulting function. So let's delineate assurance. For the compliance officer or the board member listening, what exactly is that process?
Assurance is the evidence engine. It's us operating as, you could say, the independent judge. The core of it is objectively examining evidence, thanks to those attributes we just discussed, to provide an independent assessment. And that assessment is our formal way of reporting and concluding on the findings. It's fundamentally retrospective. We look back at what happened, compare it to what should have happened, and then we render a judgment.
And the quality of that judgment, it rests entirely on the quality and the breadth of the evidence you gather. We aren't just reading spreadsheets, are we? I mean, a systematic approach requires casting a really wide net.
Absolutely. The evidence has to be multifaceted to be conclusive. The hard evidence, that's things like looking through documents, reviewing contracts, checking permissions.
And the numbers.
And performing analysis, checking trends, looking at different numbers. That's crucial. But the most insightful evidence is often the soft data.
Give an example of that, especially the observation piece. What does it look like when an auditor is observing things you can physically see?
Well, that might be watching a physical process actually unfold. Let's say you're auditing security procedures for sensitive information. You don't just read the policy manual.
Right.
You might go and observe how a security team handles a high-risk handover. Are they following the login procedure exactly? Are key documents stored in the right fireproof safe after hours? Or are they just left on desks? That visible observation, combined with interviews and corroborating what people tell you, that builds a holistic and Really an undeniable evidence
Oh,
base.
it sounds incredibly thorough, which explains an interesting industry observation we saw in the sources. Many internal audit departments, especially in heavily regulated areas like banking, the example was 40 banking internal auditors in the Luxembourg IAA chapter, they focus almost solely on assurance. Very few reported doing regular consulting.
Assurance is the bread and butter. It has to be. It delivers that definitive, independent assessment the board craves. But that brings us perfectly to the second pillar, consulting. If assurance is the objective judge reviewing the past, consulting is more of a forward-looking collaboration.
This is the pivot point. The big difference is who initiates and who dictates the terms.
That's it right there. In consulting, the scope and nature of the engagement are agreed with the client. That's the crucial difference. The scope is not necessarily determined by an assessment of risk, like a typical assurance engagement. Here, the client dictates the parameters, and we decide if our independence allows us to meet that need.
Okay, let's make this concrete. Walk us through that anecdote from the sources, because this is where it gets tricky, right? When management requests something, that sounds a lot like their job.
It's a delicate dance. You have to help the business without becoming the business. So let's use that anecdote. Imagine a global compliance function just rolled out new, critical procedures across 4 continents, a massive project. They come to internal audit and they ask, can you, with your global reach, go verify whether these new processes are actually in place and operating?
Which sounds like textbook management control monitoring, something a second-line function might do. So how does internal audit accept that without losing independence?
That is the political navigation that defines a consulting engagement. First, it was out of the audit plan, but IA realized they were uniquely capable. They had the people on the ground. So they accepted, but, and this is crucial, they formalized it within the internal audit plan. That step required consultation with the audit committee, ensuring the highest level of governance was aware and approved.
So the audit committee, as the ultimate client, signed off on the work, even though the chief compliance officer was the day-to-day client.
Exactly. They agreed on the exact scope and tests with the CCO testing samples in each region. They treated it as control monitoring under an agreed scope. And this is a high-value activity because you're leveraging IA's unique position to help a critical business objective.
But this leads us right to what you call the forbidden zone. When you're that close to operations, helping test new controls, where is that critical line that auditors cannot cross? What's the #1 rule in consulting?
This rule is paramount. Crossing it isn't just a technical foul. It voids your independence on the spot. Internal auditors are absolutely not allowed to assume any management responsibility. So going back to that compliance example, once they finished their testing and reported their findings, say that Europe was lagging in implementation, the auditors could not, under any circumstances, take the next steps.
They can't enforce the change.
They cannot. They couldn't punish the people who didn't follow the new procedures, nor could they modify the procedures themselves. That's defining policy. That's managing personnel. Their job ends with the testing and the reporting. Implementation, punitive actions, policy mods, that stays strictly with management. That barrier is the ultimate safeguard.
That structural separation is fascinating. Okay, so we've covered the attributes independent and objective, and the 2 services assurance and consulting. That brings us to the second major clause of the definition, which is all about impact. It continues. Internal audit helps an organization accomplish its objectives.
This is the so what of the job. How do we deliver that help? And the definition gives us the methodology by using a systematic and disciplined approach. In practical terms, that means adhering strictly to the IIA's professional practices framework.
So the systematic approach is the engine, and the objective is to evaluate and improve the effectiveness of 3 very big, very specific areas.
That's right. The focus is on the 3 pillars that define the health of any enterprise. Number 1, risk management. 2, control. And 3, governance processes. So much of the CIA program, and our work in general, is really based on those 3 areas.
And governance in particular, why is that so uniquely tied to internal audit? Other groups touch it, but IAA seems positioned to own the evaluation of it.
Because governance is where the tone at the top lives. It's the structure, the ethics framework, the policies that dictate decision-making. And since internal audit reports independently to the highest governing body, the audit committee, we're uniquely positioned to assess whether management's actions align with the board's mandate.
Okay, we have the full picture now. But this brings up the critical question for anyone listening. Is other functions, quality assurance, legal, compliance, the whole second line, also look at risk management, controls, and governance? What makes internal audit special? What's the secret sauce?
And this is where we circle back to the very beginning. The key differentiator is not the subject matter everyone looks at controls. It's the mandate and the positioning. Legal and compliance are second line. They are management functions. They execute control.
They have skin in the game.
Exactly. Their objectivity is inherently compromised in a way because their advice influences the results they report on. Internal audit's unique strengths are, 1, our fundamental independence, guaranteed by that reporting line to the board. 2, our fundamental objectivity, which is mandated by ethics. And 3, our adherence to that systematic and disciplined approach, a globally recognized framework for assurance.
So it's that uncompromised position that allows us to deliver a credible, unbiased view on the effectiveness of the entire control framework.
Including the functions run by the second line.
Yes.
This independence is what differentiates internal audit from every other vital department. It's why our word carries a unique weight.
So, wrapping this up, what does this all mean for the compliance officer or auditor thinking about this definition? We started by saying it's often just recited, but what we found is it's really a blueprint.
It is the ultimate roadmap. It establishes that integrity through independence and objectivity is the precondition for all our work. It defines the two service models, assurance and consulting, with really strict rules, especially that prohibition on management responsibility. And then it sets our mission on evaluating and improving those three indispensable pillars: risk, control, and governance. When you understand those layers, you understand your purpose.
A deeply clarifying framework. Now, before we go, based on our discussion of consulting engagements and that high-stakes rule, the forbidden zone, let's leave our listener with a final provocative thought.
Okay. Given the strict prohibition on assuming management responsibility during consulting engagements, how can compliance and audit functions ensure their valuable suggestions, which often require fundamental process changes, are effectively adopted by management without crossing that critical line and taking ownership of the processes themselves? That gap between a great suggestion and managerial inaction, that is a professional challenge worth exploring.
All right, that's it for this one. Huge thanks for being here and for supporting the Compliance Officers Playbook podcast show as a paid subscriber. Couldn't do this without you. Catch you in the next episode.